I'm sure people will walk in after their coffees. Heavy session, we are following up after a heavy session, but this is no less an exciting topic for people who are dealing with it on a daily basis. Thank you all the esteemed panelists, Professor Raj Swami sir, who's been involved with NFRA from the beginning. Pramod Rao, you've seen it from the regulator's perspective. Ayush, you see it on a day-to-day basis. And Mr. Sriyam, you have the systemic perspective. For those who are not aware, the NFRA is a very unique innovation in the institutional space. It was set up to regulate the professions that was self-governed for a very long time. In that sense, it is a break from the past. It is also an innovation because it separates the function of conducting examinations and disciplinary proceedings and the standard setting functions. It is a young organization. It's just 7 years, 8 years in existence now. So there's much for us to think about, to see what it has meant to the Indian ecosystem, commercial ecosystem. Has it really made an impact? Has it improved the disclosure quality? Has it improved professional standards? Maybe 7 years is too less in the large, the long arc of development of India. But nevertheless, it is an opportunity for us to take stock of what has happened over the years. So I'm going to quickly ask, we're going to follow a round of comments from each of the panelists, and then we'll have a quick takes and open it up for questions you may have. May I ask Ayush, you are probably the greatest in touch with on a transactional level. What do you feel needs to improve in its process design, in its capacity? How do you think it has been functioning over the last 7 years? Some thoughts on that.
Hi everyone. So I did chartered accountancy and then I moved into law. And a large part of what I do is defending CAs and CA firms before ICAI earlier and now also before the NFRA. I think since NFRA came into being in 2018 end, I think the two burning issues at that time, I would say one is audit independence and the second is audit quality. So I'll just touch upon both these issues first. So for some of you who are not chartered accountants, an auditor is a person who goes and audits the financial statements of a company and reports to the shareholders. What is audit independence is, you may be aware, those same chartered accountants also perform non-audit services, for instance, tax services, consultancy, financial advisory, etc. etc. So the issue that arises is what is the bright line threshold that the law should have to ensure that the auditor acts free of any fear or favor. And this issue is a vexed issue across the world. It's not just an India-specific issue. On this, I would just like to say full credit to NFRA. Since NFRA has come into being, the needle has moved significantly. The Companies Act, while it 2013, the relevant sections were enacted in 2014. Section 144 provides a list of prohibited services that an auditor cannot provide to an audit client, its holding or subsidiary. Things were quite silent from 14 till about 2019. That's when NFRA started all their actions and enforcements. 2020, something very interesting happened. 5 of the 6 largest firms came out in the public and actually said that we will not provide any non-audit service to any of the listed or public interest companies. So, to my mind, I would say this is a huge step that was taken by the NFRA, that went back to the root of restoring faith into the auditing ecosystem in India. So full credit to NFRA by way of their outreaches, by way of their inspections and enforcement orders. They made their expectations very clear, which is zero tolerance towards any independence issues as far as audit is concerned. The second one being audit quality. So of course NFRA has been quite strict. If you followed in the news, they were very active with coming out with inspections, reports and enforcement orders, levying quite a significant amount of penalties and banning some of the partners of audit firms as well. I will talk more from a practical perspective. Every year around this time, April, May and June, as a lawyer I receive many queries coming from the industry, which are listed companies, and from the auditors who are having issues during the course of the audit, because there may be unique situations, not just fraud related matters, but unique situations such as non-compliances, etc., etc. What I have observed is that there is a substantial difference between how the auditors were viewing the same issues earlier versus now. What the auditors are now seeing is that whether this is something that the shareholders should know of, and if that is the case, they are making sure that it should be reported. And secondly, they are foreseeing how NFRA would view it in view of the already available information in the public domain. So in that sense, I mean, professional skepticism, which had earlier become possibly more of a decorated word, we are seeing that far more into action. While the industry, which is the clients, are not so happy because they are feeling that the auditors are far more risk averse now. But to my mind, that's a good problem to have given the circumstances. This couple of small other issues is the recent initiative by the NFRA to also tie in the audit committee and the board members. To my mind, is a very significant step. While legally speaking, they don't have jurisdiction over the audit committee members of the board, but still they are making their expectations clear by way of an advisory that when auditors report something to you, there should be substantive communication between you and the auditors to set the expectations. So it obviously goes back to good corporate governance and tying all the relevant stakeholders together. I'll just pause here and maybe we can discuss later when there are any questions.
Overall positive.
Extremely, yes.
Move to Mr. Sriram now. Sir, you have seen the development of the Indian corporate system and capital markets. And, has NFRA made an impact? And Ayush spoke very well of the enforcement, the aggressive stance taken by NFRA, imposing penalties upon banning them, the IFS saga, all that. Is it a good strategy for a young regulator? Thoughts?
Thank you for having me firstly on this panel. Good afternoon everyone. I bring a perspective of an investor because we make voting recommendations for shareholders. So when we make these voting recommendations, one of the recommendations is appointment of auditors. Right? So we have always advocated one, even before all these regulations came, the split of the non-audit fee and the audit fee, detailed disclosures of what the non-audit fees would be, etc. Of course, that now, as he pointed out, some audit firms have completely said that they won't do any other functions apart from just audit. Two is obviously auditor rotation is primary, this one. Now audit partner rotation, etc. All these have become again codified now, so to that extent they are now mandated. If you go back in history, even disclosing sales numbers, history means I am talking about 100 years ago, companies even disclosing sales numbers to shareholders was considered sort of we are disclosing much more, right? Of course, today the numbers that companies are disclosing and everything has become much more granular. There are accounting standards, etc. But then, what was the need for auditors? There was a problem. That's where there was a need for auditors. Then the Enron case in 2001, where Enron and WorldCom and all disappeared, that's when the Sarbanes-Oxley Act in the US, and then the US thought that the auditors are not doing their functions. Arthur Andersen, for example, which was a storied accounting firm and auditors of Enron, etc., they were complicit with Enron, with the management of Enron, and they were charging a lot of consulting fees. And so that's why there was a need to set up a PCO. Always a problem triggers a solution or a need for a regulator. In similar case, in India, this NFRA came up because of the ILFS problem, again, right? So a problem triggered a solution, and the solution here is this. Definitely, to come back to your question, it has made an impact. The aggressive stance immediately they took to put onus on the auditors to put. Now, what has happened? As he rightly said, what's happened is no longer is an audit firm. Firstly, audit firm is one thing, audit partners are another, right? So, usually audit partners are complicit with their clients, but now the firm internally has to review that their audit partners are not so much beholden to their clients. So, to that extent, audit firms are very, very wary of, they would rather let go of a client because it impacts their overall revenue. As I said, the fines that they need to pay, etc., is much more debilitating to the firm. So, to that extent, the firms have become very cagey. They would rather disclose, if it needs to be disclosed, they would rather disclose than hide things. So, to that extent, the onus is on the firms. I think, especially the large firms, are treating this, the prevalence of NFRA very seriously. Obviously, just like when SEBI became a regulator, there was pushback from the broking community, etc. The same way when NFRA was established in 2019, there was pushback from the audit firms. Of course, there could be more to be done. Enforcement was the initial, I would say, the stick that NFRA came to, and it quickly made an impact. Now they need to move to capacity building, engaging with accounting firms, ensuring that there is standards which are set and there is continuous consultation. We cannot wish it away, accountants cannot wish it away now. So to that extent, NFRA is a raison d'etre, and so they have to just work together to, for positive engagement and to ensure that there is better consultation and engagement with NFRA.
Thank you. So another vote, positive vote. Maybe we should have selected the panel differently.
Positive, I'm saying there is more to be done from enforcement to now engagement. Yeah.
So Pramod, we now move to Pramod. Fantastic opportunity. He has been the general counsel of the leading business house in India and been with the regulator. So you have a very, very unique perspective to offer on this design of the institution and the trajectory of it. Would you have done things differently if you were in NFRA? And what are the learnings that you can see for NFRA from similar such regulators which had to battle this territorial fight, NFRA versus ICI? They have had to battle it, right? So which other regulator do you think they can learn from?
Thanks. I think I should probably just step back and say that there were two big opportunities before NFRA became a necessity. I think one was for the institute. From whenever it could have taken charge of professional discipline, within their membership, I think the need for NFRA may not have arisen. I think at some level we have to recognize that that self-regulation had not yielded results. I think that would be part one. Part two, I think the recognition of accounting standards actually surfaced earlier itself to the promulgation of Companies Act 2013. We had a Satyam, we had a couple of others which just came around that time. So the NFRA was thought of, and indeed the provision added to the Companies Act, but just not notified until, mentioned, that we had the next crisis of IFS. So at some level we had opportunity to have probably set it up in peacetime, or at least after the Satyam had got resolved in whatever piece you can consider that to be, and templated it to sort of come around. But I think it's right that every action has a reaction, and therefore the reaction which has birthed NFRA, we have to recognize that came at the failing of the auditors, failing of probably those charged with control itself of the enterprise, and that's why the enforcement actions. That is why the various sort of things. I would say that trial by fire, there are things which I'm hoping the company's amendment sort of fixes quite a lot of that for NFRA, because while they passed a lot of enforcement orders, most of them got appealed and stayed as well. Right? So if we have to recognize that those enforcement action had some effect, they have had effect after the stay has been procured by the people affected. So that is again a reality. Right? Had that shoe actually pinched fully, it would have been a very different environment again. So I would say maybe again that's for the better, because the audit firms, what they have declared and what they have therefore started doing. What could be done differently, I think, is now, and I think it's both the previous chair, the current chair. I think the engagement has started, that they are now doing road shows, they visit various cities, they are engaging far more with the CFOs, with the auditors themselves directly, as opposed to just through the institute representatives. And I think that needs to go up. The one leaf I would take out of another regulator's book is really from SEBI. SEBI has advisory committees across its different operating divisions, and which sort of help it both keep pace with what's going on, and to decide where to intervene, or at times hear from the market that they need to come in and do something. I think that would be one piece maybe for NFRA to pick up. That create those advisory councils of investor representatives, of maybe the CFOs, of people in the audit committee who are chairing it. Because these are the people who are also dealing with the auditors at various levels, or what they are publishing or reporting on. So each of that, to my mind, is an opportunity to sort of learn. And I'm not saying each of that will lead to some intervention, but it is just probably keeping abreast of what's going on. That could be a modicum of, sort of being done. Does it require regulatory changes? I wouldn't think so. I think it's more about how do you, just begin on stakeholder consultations. RBI has done that way back in 2000s when they wanted to refresh their regulatory approach. They actually set up a series of committees which helped inform them. So to my mind, that is something which I could sort of think for them to do. The segregation of enforcement action will be a must going forward. I think clearly, the person who is sort of doing the report should not be the one passing the judicial order. And I think that again, the brief is available from SEBI's thing. There is a separate adjudication wing, or what we call inquiries and adjudication department. Those are the people who will look at and pass orders after an initial report by the scrutiny or whichever the operating team has done. So there is segregation even within the regulator. Like we think of it as the executive branch. The quasi-judicial or the judicial function has a separate treatment, which then the appeals lie to SAT in SEBI's case. So to my mind, that segregation will certainly help, and what it will help is that enforcement orders become reasoned. There is ability for people to then sort of look at it and say yes. A judicial mind or a quasi-judicial mind looked at it, as opposed to the person who drew up or identified the issue. So those are what I can think of really as going forward. Did it have the effect that we wanted to in the last 7-8 years? I think it has, that I acknowledge. But these are equally on the roadmap, and I think some of them are getting attended to, and some could be future attendees. So I hope that gives some...
Yeah, the overview. I will come back to each of you with a couple of follow-up questions, but now to pass the mic on to the OG. You've been part of the from NFRA from the very beginning, which is why I held you back to the end, sir. There are international examples of NFRA, the PCOB, etc. Do we want to compare ourselves to them so early in the game? What is your thoughts on NFRA's development?
Thank you. First of all, many thanks to Daksh and Surya Prakash, for inviting me to this forum. So I just want to begin by saying that I am a part-time member of NFRA, but what I say here or do not say here, that is in no way it's a reflection of NFRA's views. These are my own views, so it's a very clear disclaimer. Okay. Now, so NFRA first of all came into existence as a baby born in a crisis. Now, there is one, I think it's a Bhartrihari Niti Shatakam, I think if I'm mistaken, something called Prodipte Kupakaranam. That means do not dig a well. I mean, actually it means to dig a well, but in the context it means do not dig a well when the house is on fire. So no point in digging a well when the house is on fire. You should actually have a dug a well earlier and it should be ready. Now, the way it works in the public policy is slightly different, so people respond to crisis. So, in 2013, the law was passed. For 5 years, successfully, according to some people, the provision was withheld. Now, I am not a great authority on law in India or elsewhere, but I know that for 5 years, for a piece of legislation to be held up is no mean achievement. So whoever has been able to achieve that, because the farmers in Delhi with their tractors and so on took 2 years to do that, and then they all dispersed afterwards. When the rains came, they all disappeared. So if there is an organization that could hold back a law from being notified for 5 years, I think that is more powerful than the Constitution of India. That's what I think. So that's what actually happened. Now there would have continued to be so, despite 2 parliamentary committees, standing committee reports and so on, had it not been for the Punjab National Bank fraud. So Punjab National Bank forced the hands of the government to act, and therefore NFRA had to come into existence. That's what in fact the then Minister for Finance and Corporate Affairs, Arun Jaitley, announced in a public meeting. He said that this is part of our measures. So given that this is how it was born, not because of perhaps a willingness to change things, but more because this had to be done. Okay. Now also remember that PCOB is a different case. PCOB was also born as a result of a crisis. That's Enron, WorldCom, at least 2 of them. But the 2002 Sarbanes-Oxley Act had a very interesting provision, which I don't think is there in any law in India. It mandated that within 6 months of that act coming into effect, SOX coming into effect, PCOB has to be set up. So you have a legislative direction that a regulator has to be set up. Now here you have a very interesting situation where after the law was passed, for 5 years nothing happened, right? So this itself clearly shows where the 2 bodies stand, the kind of political, administrative support they get. Okay, in 2018, finally it was notified on the 1st of March and 1st of October, first member joined, full-time member joined, and then I think 2nd October also the chairperson joined about the same time. So ILFS was the first one they took up, the first case, because ILFS was already burning. It was a huge problem. It was threatening to, those of you can revisit those years, threatening to bring down the whole economy. It was a huge, 100,000 kind of 1 crore, 1 lakh crore balance sheet size. And then one by one, Diwan housing happened after that, came out after the surface. So NFRA began with fighting fires. It had no time to decide on its processes and so on. So it worked with all of these cases and references kept coming to the government. Then there was a spate of auditor resignations, which to my mind is a very important thing, because a lot of people got rattled, which I think is also like a point that Aish made. So if there is one thing that NFRA achieved fairly early on without even firing a single bullet is, I think it created fear in the minds of people that if you do some wrongdoing now, right? I mean, it is like, don't mess with me, I'm a Texan kind of thing. So if you do this, then you'll be in big trouble. Earlier, you could do everything and get away with it based on the cloud you had with a self-regulatory organization, but that was no longer possible. So initial years, the focus was entirely on enforcement, punishment, and so on, which I think was right. because that is what the public expectation is also there. And there were serious institutional breakdowns that happened. Then over the years, after it settled down a bit, then NFRA started paying attention to engaging with the community. Sriram and I were on a committee. I chaired the committee, he was a member, kind enough to agree to be a member. We gave a report to NFRA suggesting that you should enhance your engagement with the stakeholders. The report is on the website of NFRA. So then we said we wanted to form advisory groups and so on, so involve experts, etc. So they tried something, so I think it's going to happen probably more now. So PCAB NFRA comparison, yes, to start with, the kind of support that the PCAB got, NFRA did not get. But over the years, NFRA has found its feet and then now engaging more closely with CFOs, with auditors, audit committee members, directors, independent directors, so it has regular programs. It also has a collaboration with the Indian Institute of Corporate Affairs for training. So NFRA is actually now, I would think, firing on all cylinders now. So it's now trying to also improve its education, advocacy, all kinds of roles. A body like this, a new institution like this, which deals with an established, let us say, a professional organization, I think it is, to my mind, it is the first time. See, Bombay Stock Exchange, PSC members, I am familiar with the Bombay Stock Exchange story. It's all described very beautifully in G.V. Ramakrishna's memoirs, 210. So that again talked about the opposition that came, but there was nothing like one professional grouping that had a significant lobby with the government. Now BSc brokers, yes, they were powerful, but they had no lobby with the government. Now here you are dealing with an organization which has a strong lobby, so NFRA had to struggle a lot in the beginning. Court cases, I think the early years went a lot in litigation, court cases, bad mouthing, dealing with all that, responding to all of those things. So PCOB didn't go through any of that. So PCOB was very, very fortunate in having one of that. But now there is a time has come now for NFRA to also look at its own role, where it wants to go, and maybe